So here, we talk a lot about the changes in tax rates in 2026. So whether someone says is it 2025 or is it 2026? Well, it's pretty much the same thing. It's 12/31/2025, which means that's when the Tax Cuts and Jobs Act sunsets, which means the new tax code, if Congress does nothing, takes place it reverts back to the old tax code at January 1st, 2026. So it's the same thing. I had somebody kind of challenging me about that. So what does that mean? So let's first talk about this sunset provision. So what is a sunset provision? So let me just write that here. So sunset. What is that? It's simply a method to bring people aboard that when Congress is trying to pass a bill, which they were trying to do here, and it was actually the president's at the time, President Trump's at the time, his initiative. He wanted to reduce taxes, across the board, and this, and when there becomes discussion, right? And the discussions often revolve around, well, that's, this type of tax cut is acceptable to me, this isn't. But many times what happens is there'll be a provision where there's a sunset provision. So that allows Congress people to say, okay, I'm going to vote for this, but I know it's going to end at some point. So instead of this Tax Cuts and Jobs Act running into perpetuity and then requiring congressional action to either change back to 2017 levels, because that was really the Obama administration tax code. Trump wanted to replace Obama's tax code with his own tax code. And I'm not saying either one was good or bad. I'm just giving you some history. To earn that ability or have that support, they had to put an end to it. If you do nothing, if Congress does nothing, then it reverts back to 2017 levels. So it's just kind of a trade-off, because many elected officials aren't keen on doing something like this that's going to affect us forever. And it's going to take some big action, right? Because a congressional action is a big action. It's going to take some monumental, it's going to take an act of Congress to make this change again. So here it automatically reverts. I hope that makes sense. So Congress just has to do nothing. And if they do nothing, then the current Tax Cuts and Jobs Act, this is called Tax Cuts and Jobs Act, reverts back to 2017 planning tax levels on 12/31/2025, which is pretty much the same as 1/1/2026, right? Because that is really a holiday, so it's pretty much the same day. So these are really the same thing, 2026, 2025 for these purposes. I'm sure there's something that happens in between there, but for our purposes, it's the same. So what I did is I took these charts and I put them side by side. Now, why can't I scroll? Well, all right. Bill Gates, help me out here. Okay. So I put these charts side by side. So obviously this is the 2017 chart and this is the 2022 chart. So this chart you can get on my website, www.attleborowealth.com. And you go under the slot corner and scroll down, you can grab these charts. This one you can't. And I actually can't. I went on to Ed's website a few weeks ago because I was talking about this with somebody to grab this 2017 tax planning chart, and it's gone. I can go back, I think, to 2019. So thankfully I had a copy of this and I had it laminated because at one point I had, well, this one has 2019 on one side, 2017 on the other side, because I was using it as kind of a comparison. So thankfully I still have it, and you'll see I have a note on the side here. And that note is what my calculation was for the top of the 28% bracket here in what I believe it'll be roughly. Now it's probably going to be much different actually now because of inflation rates, but what I thought it would be come the end of 2025. So that's simply what that note means. All right. Now, unfortunately, they changed. What I wanted to share with you is really what the big changes are between these two structures of tax code. Now, unfortunately, they've inverted this. I like the way they used to do it right over here, where they start it with the lower number and they go up to the higher number. That ascending in that order, I guess descending from the top, ascending from the bottom. So I don't know which is correct. Somebody will tell me though. So I like this though, starting from the bottom, starting from the lowest, going to the highest, because we use that graduated cylinder comparison all the time, and we go from 10% up to 37% where we are now, and we talk about this, your income filling in this graduated cylinder. So it makes more sense for whatever reason now, and I'll have to ask them. The Slack group now has inverted this, but it is what it is. So what I did is I just plucked these out. So I grabbed these sections that I want to talk about and I moved them down here. So come on, there we go. All right, so I cut them out and I moved them down here, and I want to show you the big differences. So the thing that everybody talks about is this, the top marginal tax rate, right? So here it's 37%, and I promise you it is the top, even though it's showing us the bottom here. And I'm sorry, I've switched these, so because I want to show what's going. So I probably made that a little more confusing. So 2017 is over here, 2022 now is over here. Because the reason I did that is because things kind of flow right to left to right, and it just felt more natural. So your 37% bracket goes back to 39.6%. So you might say, okay, that's not such a big deal. And this is for right now, this is for people married filing jointly. So pay attention to these differences here, married filing jointly and single. So, and I just have to say that you always have to remember this, is that none of us get out of this life alive. And if you're in retirement with a spouse, it's likely that at some point you're going to be filing as a single taxpayer. So if you just compare the differences, let's look at 10%, from 0 to 20,550 for a married filing joint couple, and from 0 to 10,275, you're in the 10% bracket for a single filer. So you'll see the taxes double really right there for you fundamentally, because the income rate drops in half. So maybe even if they don't double for you, they increase significantly. And that happens in every step of the tax code. So let me just back those out. So everybody talks about this, the top of the code, 37% compared to 39.6. And some people might say, well, that's only a 2.6% difference, right? So that little triangle for difference or delta. So the difference is only 2.6%. Is that really a big deal? Well, the big deal is that we go from $647,000 back down to $470,000 for a married couple filing jointly, and for a single filer, it's $418,000. And some people might say, that's a lot of money. How many people is that really going to affect? Well, that's a good point. But if we look at the middle here, I want to look at the middle bracket. So 22 becomes, let's look, and again, I wish these were different, and I can draw them differently if you want, but the 10, we're going to bring this over here, that stays the 10, right? The 12, follow the line, goes to 15. 22, follow the line, goes to 25. 24 goes to 28. 32 is fun, isn't it? It's like elementary school. Goes to 33. 35 stays at 35. Okay, so the biggest change is really right here, isn't it? Right in the middle. And that's just the percentages. Pay attention to the income. So let's drop down here. I want to make this a little clearer. So we're going to focus on the 22. And I'm going to do these upside down, 24% and 22%. And this one's the 2022 tax code until the end of 2025 or the beginning of 2026. And this is 2017 tax code. That's what it's set to revert to, adjusted for inflation numbers. I should say to be adjusted for inflation, because the numbers we have are not adjusted. So we have the bottom of the 22% and the top of the 22%. So I'm going to list those here. So currently the bottom of the 22% is 83,000 from $83,551 to, now these are married filing jointly. I'm not going to do both married and single. You can reference these charts if you'd like for that. But for right now, I'm just going to show you right here the married filing jointly to 178, 150. So that is the range for the 22% marginal tax rate. 24 goes from 178,000 to $151 to $340,100. Big span. And we often talk about, look at that. Look how much more money just for 2% that you can convert in your Roth IRA from $178,000 to $340,000. And that's our sweet spot, right? We do a lot of work, and most of our work right here, fill up to 22, often fill up that 24% bracket to be able to really move a lot of money. Now, all's not horrible, because I see some questions. All's not horrible because I started doing Roth conversions in 2012. So we were doing Roth conversions from 2012 all the way up through and including 2017 until the Tax Cuts and Jobs Act changed. So it's not terrible, but I want to show you the difference. So now let's take this, and 22% doesn't exist under 2017, does it? No, it is now 25%. And 25%, pay attention to the income. The income starts in the 25% marginal tax bracket from $75,901 to $153,100. Right? So that's pretty close. It's likely this will be closer to 178. It might be 160 or so by the time we get to 2025. But that one's pretty close, but you're plus 3% in that bracket. That's a lot. Now, here we go. Next one is 28%, but watch the income. So we're plus 4% here. That's a lot, because think about it. You're plus 3, plus 4 there, right? So that's a significant amount. Now, here's the income. Remember, we go from 178 to 340 here. Well, here we start at 153,101, and we go to $233,000. So even adjusted for inflation, we've shaved close to $100,000 off of this top tier. And this is where most of the pain, I believe, is going to be for your middle class taxpayers. And then we can add on to here. So we add the 33% bracket here, and that is 32 here. So that's plus 1. But again, the income levels are so different. 33 starts at $233,000. That's really easy to cross into for folks in our area. And certainly when you're doing Roth conversions, $233,000 to $416,000 in the 33% bracket. So this is tough. This is 33%, makes it very, very difficult for the math to work with Roth conversions when you're filling that up all the way. Sometimes when you just cross into it a bit, it's okay. And for some people, it makes sense to convert at higher levels. But I'm hoping you're seeing here that where are my pens? That the real challenge for most folks is going to be right in this category here. So going back here, it's really the middle. And that's why we talk about these, it's really going to affect middle class America. And with all of our work, remember, we fully expect that the middle class, average middle class American will be in the 40 to 45% effective tax rate in the next, 10 years. And you can see how that'll happen because it's so much creeps up. So remember, and that is just 2017 in the Tax Cuts and Jobs Act. But don't forget, the Congressional Budget Office says we should be looking at 25. I believe it's 62 and 88%. It might be 64. But those are dangerous areas. We're going to get there at some point, probably around 2030. what we're looking at legislatively as it stands right now is just the reversion to 2017 levels via the Tax Cuts and Jobs Act changes. So I get a lot of questions about that. It comes up. I hope that was helpful. Let me check our questions. Just put this up here. All right, Doug. Hey, Doug. Well, the standard deduction in 2026 also changed, as that can also impact many. So, Doug, it's been a little while. I think you asked this before, and Walter asked the same thing. So you guys are on the same page. So it used to be a standard deduction and personal exemption, and then it was combined to be a standard deduction. So I believe that it reverts back to a standard deduction and personal exemption. So Walter asked what that is. So let's see if it should be on this 2017 tax chart. And it's not, unless I'm just not seeing it. I don't see it on here, but I can do some quick research and see. But you'll see, you can see here that it's currently on the other chart, the 2022 chart right over here. I thought it was on 2017 as well, but I guess they added some information onto there. But the standard deduction and personal exemption, when it came together to be a standard deduction, really was very similar, nearly the same. So I don't expect if it reverts back that it's going to have that much change as far as the amount. But I'll do some research on that. Good question. All right, it is 10:48. I hope this was helpful. Always great seeing you folks. Let me close out these. You're going to get a survey, as you always do at the end of this, and I appreciate you taking it. Let me know how this webinar was, and if there's any material you'd like to see in the future. And otherwise, we'll see you next week. Have a great week and take care. Happy Memorial Day. Take care.